Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end flat after a range-bound session. Mid-caps underperform. Pharma stocks drag even as IT stocks offer support. Supreme Court allows states to collect royalty and tax dues on mineral rights from companies retrospectively from April 2005, but directs states not to levy interest or penalty on past dues. Arrears will be paid over a 12-year period from April 2026. Analysts say that companies are staring at 2 lakh crore financial hit. Supreme Court stays the Company Law Appellate Tribunal's order which allowed Byju to settle the 158 crore rupee dispute with BCCI. A US lender to Byju opposed the settlement, claiming the company is using funds stolen from them for the settlement. Cash-strapped SpiceJet's market share in passengers dwindles since the start of 2024. On-time performance is the worst among all airlines. SpiceJet has been reporting a net loss for the last 6 years. The Enforcement Directorate quizzed Mohit Burman last week as it probes allegations of money laundering related to the Burman family's open offer to Religare shareholders. A statement from the Burman family says that the open offer price for Religare has been calculated based on the formula outlined in SEBI takeover regulations. The Income Tax Department enhances its scrutiny into real estate investments made by high-net individuals in foreign countries. Sources say that recent surveys revealed rise in real estate transactions by Indian HNIs in Switzerland and Portugal. Add that the taxman has already issued notices seeking more information. Car dealers are worried after inventory rises by 12% in just 1 month ahead of the festive season. Sources say Maruti, Mahindra and Tata Motors and Kia see the biggest jump in unsold cars as passenger vehicle sales shrink by 2.5% in July. An army officer dies in an encounter with suspected terrorists in Jammu and Kashmir's Doda district. A civilian also injured in the ongoing encounter. 4 soldiers, including a captain, have been killed in multiple incidents in Doda district over the last 1 month. CBI begins investigating the rape and murder of a junior doctor in a Kolkata hospital. Kolkata police hands over the suspect who worked as a civic volunteer. Hospital services remain affected across the state as healthcare workers continue to protest. No relief for Delhi Chief Minister Arvind Kejriwal in the liquor policy case filed by the CBI. Supreme Court rejects interim bail plea but issues notices to CBI seeking a response by the 22nd of August. Battling low approval ratings, Japan's Prime Minister Fumio Kishida says he will step down next month and not seek a second term. Calls for change in leadership and a vigorous debate within his party. All right, let's start with the day's trading action. Range-bound sessions saw the Lal Street end the day flat. Nifty and Sensex ended mildly in the green, but the broader market underperformance persisted. The mid-cap index fell over 0.5%. IT stocks battered for the bulls, but the metal and pharma index were a big drag. The big story this evening: in a majority ruling, a 9-judge bench of the Supreme Court has allowed states to collect past dues on mineral rights in the form of royalty and tax retrospectively from April 2005. 8 judges were in favor of the verdict. Justice Nagaratna issued a dissenting order. The mining industry fears the ruling could cost up to 2 lakh crore rupees. The ruling does provide some respite for the companies as the dues can be paid in a staggered manner over a period of 12 years from April 2026. Abhimanyu Sharma reports on the landmark verdict from the Apex Court.
The Supreme Court has affirmed the legislative competence of states to levy royalty and taxes on mining leaseholders and on mineral-bearing land within their respective jurisdictions. And now the fresh judgment which has come out from the Apex Court has also affirmed the retrospective levy of such royalty and taxes starting from the 1st of April 2005. However, the court has made it clear that there would be no penalties or interest which is to be imposed by states on mining leaseholders holders as well as on the mineral-bearing land in their respective jurisdictions. Also, a time of 12 years has been provided for staggered payments to be made by mining leaseholders in order to ensure that there is no immediate big financial impact on them. It remains to be seen whether this is going to act as a double whammy for mining leaseholders and for mining companies, even as mining ministry official had indicated that this may serve as a setback for several mining companies. Now, several states stand to benefit from this ruling. Several mineral-rich states, including Chhattisgarh, Rajasthan, Orissa, Jharkhand and Karnataka.
Now, what does the Supreme Court order mean for the sector? Nigel D'Souza is here to decode the impact for us. Nigel, over to you.
Let's move to the stock focus then and the stock impact. The biggest loser, Tata Steel, as it has provisioned 17,300 crores as a contingent liability against the claims by state of Odisha if applied retrospectively. This is what's happened, right? Now, this 17,300 crores, it amounts to nearly 10% of the current market cap. But keep in mind, the stock has been weak post the Q1 FY25 results when they did give out this number of around 17,300 crores. Hindalco, well, they spoke to us here at CNBC-TV18 and they said if the taxes are levied retrospectively, then it's unlikely to affect them as they do not have any kind of pending claims.
The contingent liability is something that has been on our books for the last many, many years. So every year, if you look at the annual report, it has always been carried. So it's not anything fresh. I think we thought it was good practice for us to be transparent about that. There is a larger impact across the economy, and that's a larger concern. On an ongoing basis, that what in the past the state had planned to tax, I think the impact would be about 1,500 crores a year. But honestly, we are waiting for more clarity on the the ask as well.
Well, we also got a reaction coming in from Rakesh Arora, who said that the companies with exposure to Odisha, Jharkhand as well as Tamil Nadu, they'll have to bear the brunt. He also said that the total estimate for overdue cess is about 2 lakh crore rupees, of which the PSUs alone account for around 60,000 crores. He also added that there might be some kind of leeway that could possibly come about for PSUs by some states. Besides mining companies, well, he believes that cement companies as well that have exposure to Tamil Nadu in particular, they could get impacted. And those companies could include the likes of India Cements, that's now taken over by Ultratech Cement, as well as Ramco Cements.
Total estimate for this kind of cess which is overdue, some industry analysts have put it at around 2 lakh crore. And in the Supreme Court, one of the Solicitor General had said that for the PSU companies itself, the impact is 60,000 crore. So we are talking about big numbers here.
Meanwhile, a note by Phillip Capital has pointed out that this move is a big negative for the steel sector, with all captive mines being impacted. In fact, the note added that steel players would see a 2 to 5% impact on their market capitalization. Meanwhile, it believes that aluminium players would see a marginal impact of around 1 to 2% on their market cap. It's a big setback for Byju. The Supreme Court has stayed the National Company Law Appellate Tribunal's order, which allowed Byju to settle the 158 crore rupee dispute with BCCI. A US lender to Byju opposed the settlement, claiming the company is using funds stolen from them for the settlement. Abhimanyu Sharma is back with us for more on this.
In February this year, US-based non-bank loan agency Glass Trust Company LLC had moved an insolvency petition against Byju's in NCLT Bengaluru. And now Glass Trust Company is an agent for foreign lenders who have collectively extended up to 85% of the 1.2 billion term loan to Byju's. They had moved the top court today, and they have already got relief in the matter as the top court has stayed the NCLT order, which had directed for a settlement between Byju's and the BCCI after a payment of 158 crore rupees by Byju's. Insolvency proceedings have been revived against Byju's, even as the BCCI objected to the same, as it was not heard by the top court. However, the court had told BCCI that it's not asking for any payment to be made from the BCCI to the petitioner. As far as this case is concerned, the court termed the NCLT order as unconscionable and fixed the matter for further hearing on the 23rd of August. Now, Glass Trust Company LLC told the top court that the NCLAT order is really infirm as far as the procedures are concerned, as there are around 3,000 claims which have been lodged with the insolvency resolution professional, and Byju and his brother are already not in India. The company had submitted before the top court that it wants any settlement to be undone, and it wants BCCI to maintain rupees 158 crores in a separate escrow account to ensure that its interests are protected. It remains to be seen what's going to happen on the next date of hearing in this case.
Right, staying with startups, quick commerce platform Zepto has reached a deal to raise $340 million in a new funding round. According to a money control report, General Catalyst will invest $250 million, while Mars Growth will put in around $50 million. The remaining will come from existing backers. The deal is likely to value the company at $5 billion. IPO-bound hospitality unicorn Oyo reported its maiden profitable year, logging in gains of 229 crores in FY24. The company said that this net profit comes on the back of 8 consecutive quarters of positive adjusted EBITDA. The company also said that they have begun expanding their global footprint by acquiring K&J Consulting, which operates premium rental homes company Check My Guest Group in Paris. E-commerce platform Snapdeal is being probed by the Ministry of Corporate Affairs for alleged regularity, violations and non-compliance with the Companies Act. As per Money Control, the probe was initiated after the Registrar of Companies flagged irregularities in its initial inquiry report. The investigation is part of a broader probe into over 700 companies which have received investments from Chinese entities. Now, SpiceJet was under pressure in today's trade ahead of its first quarter earnings. The airline has been facing severe liquidity crunch and has been delaying payments to various partners. Its performance since January has been declining. Madiha Mujawar is here with the key numbers. Madiha, how is it looking for SpiceJet?
Well, SpiceJet has been facing liquidity crunch for quite some time. So the management, how the management plans to improve the situation is something we need to watch out for. So far, its performance metrics are showing a declining trend, like the number of passengers it carried is down from 7.4 lakh in January to 5 lakh in June. And the 5 lakh number is against 1.32 crore total passengers that were carried by all airlines in June. So that naturally impacted SpiceJet's market share that came down from 5.6% in January to 3.8% in the month of June. Now, all of this impacted SpiceJet's punctuality. The airline had the worst on-time performance of 46% in June. We can relate the declining passengers and market share to the airline's shrinking capacity. SpiceJet's available seat kilometer is down by 30% from 7.72 lakh in January to 5.4 lakh in the month of June. Now, all this has led to a deteriorating financial health and a worrying track record. Like SpiceJet has been making losses at a net level for past 6 years and at an operating level for the past 3 years. It has a negative net worth for many years and has a borrowing of over 1,100 crores. The airline has lease liabilities of 4,000 crores, and that's also the reason why so many lessors are taking the airline to court seeking their payments. Moreover, SpiceJet's value of fixed assets has depreciated to 2,500 crores. A negative operating cash flow of 600 crores in FY24 also makes servicing of the finance cost of 100 crores a big challenge for the airline.
All right, thank you, Madiha, for that. Moving on, Dabur chairman Mohit Burman has been summoned by the Enforcement Directorate in connection with an alleged money laundering investigation. The probe is related to the Burman family's open offer to the shareholders of Religare Enterprises. Now, sources tell CNBC-TV18 that Burman appeared before the Federal Probe Agency last week and his statements have been recorded. Remember, the Burmans have been accused of siphoning funds from the Religare Finvest under the Religare Group into companies connected to the open offer. Onto a CNBC-TV18 exclusive, the Income Tax Department has issued multiple notices to seek information of overseas real estate investment by high net worth individuals. Timsi Jaipuria joins us now. Timsi, what are your sources telling you, and what does it mean for HNIs with real estate investments abroad?
Well, that's right. What sources are telling CNBC-TV18 is that the real estate investments by HNIs outside India is currently under our Income Tax Department's scanner. IT department has undertaken enhanced tax scrutiny of real estate investments made by these HNIs abroad. The IT department has issued thousands of notices in this regard, seeking information of assets that are held abroad by these HNIs. Also, sources say that the IT department has conducted surveys which reveals that there is a sudden rise in real estate transactions by Indian HNIs in Switzerland and Portugal, to be precise. And the tax department is targeting undisclosed foreign assets and incomes that are held abroad. IT department has sought more disclosures on foreign real estate assets that are being held by these HNIs. And through this survey, which is currently being done under Section 133A, IT department has uncovered some interesting trends and some interesting notings, which includes that there is a sudden rise of number of HNIs holding immovable assets abroad, availability of properties at prices significantly lower than similar properties in India. Thus, that is why these HNIs are buying abroad. There is an influx of multinational companies into India, which has led to old business houses selling their stakes, leading to wealth generations. HNI find it investment friendly, rather foreign investment opportunities more attractive than those in India, and thus IT department has asked field formation to widen the scrutiny, seek more disclosures of assets without any time limitation. Let's see what finally culminates out of this entire drive of surveys on HNIs.
Right, thank you, Timsy, for that. The National Company Law Appellate Tribunal has stayed insolvency proceedings against Coffee Day Enterprises till the next day of hearing. The interim order was granted a day after the company challenged an order by the NCLT which permitted the initiation of proceedings against the company by IDBI Enterprises. All right, it's time for a short break, but don't go anywhere. Car dealers are worried after inventory rises by 12% in just 1 month ahead of the festive season. More details when we return. Welcome back. Here's a look at the national headlines. An army officer has been killed in action in an encounter with suspected militants in Jammu and Kashmir's Doda district. A civilian has also been injured in the ongoing encounter. Over the last month, 4 soldiers, including a captain, have been killed in multiple incidents in Doda district. No relief for Delhi Chief Minister Arvind Kejriwal in the liquor policy case filed by the CBI. The Supreme Court has rejected an interim bail plea filed by him. However, it issued notices to CBI seeking a response by the 22nd of August. After rising for 4 months in a row, India's wholesale price inflation has cooled to 2.04% in July due to sharp reduction in food prices. WPI stood at 3.36% in June. Wholesale vegetable prices recorded a deflation of 8.9% in July, as against an inflation of 38% in the previous month. Moving on to Motown, where the number of unsold cars with dealers have risen substantially ahead of the festive season. Parikshit Luthra is standing by with more. Parikshit, how are dealers and manufacturers dealing with this sudden inventory surge?
Well, yes, the dealers are pushing back. They're urging automakers to reduce inventory and sell and dispatch less stock to them, because this is leading to a glut in the market. So just to give you some numbers, the passenger car inventory, which was about 62 days in the month of July, has risen to 72 days. Now, this roughly translates to an increase of 1 lakh vehicles in the overall dealer stock in the country. So, for example, in the month of July, there were 6.3 lakh unsold vehicles, and now this number has gone up to 7.3 lakhs. The total worth of this inventory is around 70,000 crore rupees, up from 60,000 crore rupees in the month of July. So this is the big worry for the dealers as to how they will fund more inventory going forward. Whether the retails will be able to keep pace with the kind of supply we're looking at in the market. And oversupply also means that you would have to give big discounts. So be it Maruti Suzuki, which is offering discounts to in the range of 50,000 to 80,000 on some models. Even Mahindra, for that matter, is offering discounts on cars like the 300, also the Thar 4-wheel drive, anything between 50,000 to 1 lakh rupees. Similarly for Hyundai, similarly for MG Motors, and in some variants, the discounts are also going up to 5.5 lakhs. Now, those are the slow-moving models. We're told that waiting times have come down drastically. Barring select models in the market, almost all cars are available readily and without a very long waiting period. Therefore, we have seen the Society of Indian Automobile Manufacturers also saying that they hope that the upcoming festive season would be a good month. The rainfall, the monsoon season will also augur well for the auto industry. But for the moment, the market is gripped with a situation of oversupply.
All right. Thank you, Parikshit, for that update. Moving on, auto major Hero Motors' first quarter earnings were below street estimates. However, the company's net profit rose 36%, while revenue jumped 16% on an annual basis. The management said that they witnessed positive trends across its domestic, EV and global businesses. And speaking of the management, Hero Motor Executive Chairman Pawan Munjal's annual remuneration topped 100 crore rupees in FY24. This is even after he volunteered for a salary and commission cut. Yusuf joins us now. Yusuf, tell us more about Munjal's compensation and how it compares with other executives.
Well, the total remuneration of Pawan Munjal surpassed 100 crore rupees in FY24, despite him taking a cut in salary and commission. He had proposed that his fixed salary be reduced by 20% effective from January this year, and his annual commission for FY24 also reduced by 20%. However, that did not stop Munjal from riding into the top 100 crore club. Interestingly, Pawan Munjal's remuneration has grown at an annualized rate of 6.4% over the last 5 years, against less than 2% in net profit. During the same period, is Munjal the only executive of the 100 crore club? Certainly not. Among the Nifty 50 companies, Rajiv Jain of Bajaj Finance also took 100 crore rupees in FY24. And other than Rajiv Jain, Wipro's former CEO, Thierry Delopate, also took 168 crore rupees in FY24. Now, remember, earlier in 2023, Hero Motor had separated the roles of chairman and CEO, resulting in Pawan Munjal taking the position of executive chairman of the company. Back to you.
Right. Thank you, Yusuf, for that update. Pawan Munjal's compensation at about 100 crore rupees in FY24. After listing on the last week, Ola Electric has released its first quarter earnings. Net loss has widened to 347 crore rupees compared to 267 crore rupee loss in the same period last year. Revenue grew by over 32%, crossing 1,600 crore rupees. EBITDA loss narrowed marginally from 218 crores last year to 205 crore rupees on Q1. And that's all we have on Business 360. But before we wrap, here's a quick programming note. Global investor, author and columnist Ruchir Sharma in his latest book argues how a more restrained government in India has been generating faster growth. He also talks about India's stock market performance versus the rest of the world, also highlights a critical flaw in his latest book, What Went Wrong with Capitalism. Catch the CNBC-TV18 Town Hall this evening at 6 p.m. Stay tuned to CNBC-TV18 News and Updates. Continue on the other side.